Right, good morning. Sorry, it's evening already. Good evening. So this is the first time I'm looking at the chat going into this week since on Sunday I've been away from the chat. Been extremely busy. It's been an extremely busy week and weekend, previous week. But I like it though. I like when I get to be more active in the real world and less active in the chat. I think the previous week I only took two trades. I think one break even and one win or two wins. I've forgotten. I have to go and check my journal. I have not looked at anything in relation to trading going into this week. I had a one-on-one call. I had like three one-on-one calls. Okay, four. I actually did too much in the weekend. I might actually have to observe the Wednesday rest for this week because the previous week there was no rest day. It was back to back from Sunday down to Sunday, Sunday to Sunday. Like there was no rest. So we would have to dive back a little bit. I was actually saying this before this video started. So now this is US 500, which is the ES. So let's zoom in now to the technicals. You think you can understand the idea of IPDA with just me explaining what another block is or explaining just technicals, standard deviation? There is a lot of, I don't want to use any bad words because this video will be going on up on YouTube. So let me just respect myself. But there are some people that just feel they would have to just plot a standard deviation and expect price to come below the 50% and then they'll buy, then they will seek higher prices. Like this is what I'm trying to talk about. So in this body of price action, so you'd have a few subset of traders that would want to do, let's take all of this off. This is chart. So we've already started what we're about to do. This video will be two parts. So the first part will be about 20 minutes because I'm currently looking at the timer because I have something to do before we'll continue. So the video will be on two parts. The first video will be this particular video that you guys are currently watching. So this part one will be posted live on YouTube, and the part two, which will be a continuation of what we'll be talking about currently in part one, but that will be more elaborated and more personal approach and my personal view on where we are likely to go or what price is currently doing, including other markets. So that will be done on the private settings. So join the Telegram to get more information on that if you're interested, because it is just for a selected few. Right. So let's continue. So where is valid I now. Now these people that we're talking about, the standard deviation guys now. Let's say they are using the bodies, they are ignoring this week. Now let's use this week to pinpoint our this thing. I can cherry pick. This is a backtest session. Hindsight is always 50. It's always 20 over 20. That means it always works. So when you're studying hindsight, your proposed theory always works. You have to come and put it in the real world. When it works in the real world, then I can salute you. But if it doesn't work in the real world, that's your own cup of tea. So now I project my fib from the midpoint, from the low of this week to the high of this swing point. So from the low of this body's weak swing to the high of this body swing. So the standard deviation only focus traders that I'm talking about. Like you have the OT guys, but these are the current guys I've been encountering for the past few days. Why? I will study that later. So now they will want to buy below these old lows and take profit above these old highs at this negative 1.5 standard deviation. Yes, that is the long term John liquidity from this using the standard deviation as a price projection. But that doesn't mean you would not set allowances for you to be taking profit as we get all of these swing price action higher. This is the weekly time frame. If you're not paying attention to what we're talking about, you'll be distracted and think I'm not paying attention or you're not paying attention. Like even with the TikTok mentality, we are just like 5 minutes into this video. It's remaining like 15 minutes to 12 minutes to round up. So when you project your fib like this and trying to buy from this below midpoint, which is fair value, All of this is a cheap price. So you have this imbalance say above the midpoint. This will be the premium fair value gap high. This will be the premium fair value gap low. Then when you take your fib from this candle's weak high to this candle's low on the week, when you take it and you measure the midpoint of it, you have consequent encroachment. You will take that consequent encroachment and plot it by yourself. I don't want this chart to be too messy. So you'd create allowances for you to be moving off and moving off. So let's focus on today's price action. So let's end this. So let's go to the part two, which is the daily review and also what we want, what we're expecting price to do going into the week and the rest of the Q4. Because it's already Q4 and we've ended everything in relation to trading for Q3. The contracts have moved to the, so if you're using the ES contract, once in a while you should check this even if you're trading the indices, the CFDs, sorry, not the actual indices. So contract have spilled and moved over to the December contract because if you can remember earlier, the previous month we were trading around the other contract. So let's check this to this. Let's see what Spy has been doing. In these settings, I can just get the using the real time trading hours. So I just get actual order flows without the times the market trades. Like Asian sessions are not recorded here most of the times because the market closed at 5 p.m. Market close for the whole day. So for an hour, market will close. Then after that hour, the market will then be ranging or trading doing Asia. This is not most times recorded by this regular trading hour. So you could you navigate that with here. You can also do this by using the ES, by using the ES 500, but that will be hectic because you'll be more focused on the time. But once you understand the narrative, here, what we're currently discussing is time. The close of this candle here, look at the time, look below. The open of this candle, look at the time, 9:30. So the Asians was not calculated. The 21, that is the 8 p.m., 10 p.m., 9 p.m., like that. It wasn't calculated. So these are where there. So looking at price like this, we have this buy side resting here and sell side resting here. And sell side, we're going to be quick with this. And on the 15 minutes time frame, we have this liquidity void. Liquidity void is an imbalance like but without no trading inside of it. So if you see from this void, there was no trading being reported inside of this candle. Damn, I've been extremely busy and moving around. I actually like it. I do like it. My back's hot. It was leg day. All of my body do hot, but I like it. So I'm going to have a well deserved good night rest. First, I need to go get something to